Hello and welcome to Cafe Mutual YouTube channel. Friends, we all know that smart beta funds have been getting very popular among investors community. In fact, one such strategy, which is momentum, is outperforming all other smart beta factors across market cycles. But what if we combine this momentum strategy with the active fund management? So, to talk more about this, today we have invited Ashutosh Bhargava, equity fund manager and head of equity research at Nippon India Mutual Fund. With 26 years of experience and 17 years in equity research, he has a wealth of knowledge through which we all can benefit today. So, let's welcome him. Good morning, Ashutosh. Welcome to the show.
Hi, Nishant bhai. Good morning.
Thank you. So, Ashutosh, my first question is on everyone's mind today. Every distributors wanted to know this. So, equity market, as you can see, that is seeing downward trend after a prolonged market rally. So, what is causing this, and do you think that a major correction is around the corner?
Um, so I think after a very strong 3 to 4 years of bull run, and valuations became a bit elevated, market was perhaps looking for an excuse.
Hmm.
And for a very long period, despite I would say economic growth slowdown, some bit of earnings slowdown, FI outflow, for a very long period, it remained resilient. And start of this year, obviously, market has lost that resilience, and the correction has surprised a lot of people who are not seen this kind of correction in the post-COVID era.
Hmm.
But in my view, that this is a very normal occurrence in the market.
Hmm.
So Nishant, if you just go back in 2021, we had a great year. Then 22, market found an excuse in the form of Russia-Ukraine war, higher inflation, higher interest rate, and it had a correction.
Hmm.
23 again, it sowed the seed of better return when investor expectations came down,
Hmm.
and 23 turned out to be the great year.
Hmm.
But because 23 as a calendar year was so strong, people had very high expectation, particularly from the broader market, because which was the segment which was leading the bull market. People had very high expectations. And now we are seeing some bit of payback in the sense that market is now more normalizing. So I would say it's more for normalization. The good news here is that after this correction, the elevated expectation from equity market would have come down. And if you look at valuations, if you look at how much earnings cut that has already taken place, and more importantly, what I always like to say is that whenever you see in any market, policymakers start to panic in favor of growth.
Hmm.
As investor, we should stop panicking or you should panic less.
Hmm.
So yes, last 6 months, 9 months, there has been more volatility, more panic in the market. But if you look at objectively, I think the risk rewards are now available much better.
Hmm.
And there is definitely support coming from both the RBI and the government. Resultantly, I think the risk to the earnings over the next 12 months are much lesser versus what they were 12 months ago in terms of potential downside risk to the earnings. So I'm actually pretty comfortable with the market outlook from next 12 months or so. Having said all this, I think I will again insist that return expectation cannot be 25% CAGR. And I
Hmm.
think this is a expectation of all those who have come in the post-COVID world. So if you have more moderate, mid-teens kind of return expectation, I think market is providing you opportunity to participate in that from here on.
Great, great, great. So, Ashutosh, Nippon India has recently launched Nippon India Active Momentum Fund. So, what's the rationale for launching this?
So, Nishan, as you started by saying that momentum has been one of the most powerful and most persistent factor when it comes to equity investing. So you have different kind of factors,
Hmm.
factors like growth,
Hmm.
factors like value, factors like quality. Now these fundamental factors, a
Hmm.
normal investor, general public, they understand it well.
Hmm.
When it comes to momentum, a lot of people think that it's something which is more random. But
Hmm.
the reality is that if you look at data
Hmm.
across markets, across size categories, across time periods,
Hmm.
this factor has been the best performing factor when it comes to investing.
Hmm.
So we thought, this is a factor where uh, while the success rate is great,
Hmm.
but can we come up with something where we can actually improve upon a pure price momentum driven
Hmm.
strategy
Hmm.
and make it more diversified,
Hmm.
make it more, I would say, better in terms of risk management? And can we really enhance the experience of the investor? And this is where, Nippon India Active Momentum Fund,
Hmm.
while it sounds like it's a price momentum driven strategy, but price momentum is one of the four factors in
Hmm.
this fund.
Hmm.
So essentially, what we are trying to do here is combining price momentum with earnings momentum.
Okay.
Essentially, what we are doing is identifying the winners based on the wisdom of the large buy side crowd, which is the price momentum,
Hmm.
and the sell side crowd or the crowd of experts
Hmm.
from the sell side,
Hmm.
where they think the tilt of earning is changing. So
Hmm.
we are combining both the wisdom
Okay. Hmm.
and coming up with an offering for our uh, investors.
Great, great, great. So, Ashutosh, for the benefit of our audience, so can you explain the concept of momentum?
Sure. Momentum is, like in physics or anything, is something which is, already performed well. But
Hmm.
in the world of investing, it's an anomaly where
Hmm.
it shows that something which has been outperforming
Hmm.
may continue to outperform in the future.
Hmm.
And there are various theories why it happens.
Hmm.
But to us, momentum typically works because not enough people have really appreciated
Hmm.
the story behind those stocks.
Hmm.
And more people are becoming believer in the set of
Hmm.
themes, set of sector, set of stocks
Hmm.
gradually. And therefore, the stocks which have been the winner in the past period
Hmm.
may continue to be winner in the subsequent period. So this is a nutshell where essentially you are betting on the already outperformers, right? Now, this is a very simplistic way to look at it,
Hmm.
but other way of looking at it is that those who outperform in terms of price, typically they also have backing from the fundamentals.
Hmm.
They have something going on in terms of tailwinds, in terms of sectors, in terms of the competitive intensity, etc. So these are generally fundamental backed stories, and it is visible in the form of outperforming the stock prices. And this is what makes it a very successful strategy. So it is not as random as what people think.
Hmm.
And it is actually, there is a fundamental rationale behind why momentum does what it does. Having said that, Nishant, there are a lot of pitfalls in momentum investing, pure price momentum investing. And the attempt of Nippon India Active Momentum Fund is to address those shortcomings, which we can discuss later.
Hmm. Okay. So Ashutosh, so you know that investors are making good money with plain vanilla product like large and mid cap fund, flexi cap fund, and so on. So what's the utility of momentum fund in life of investors, and why should they invest in them?
So just you think about momentum, whether it is earnings momentum or price momentum.
Hmm.
Momentum by very context or very as a factor, they are agnostic to size,
Hmm.
they are agnostic to style,
Hmm.
they are agnostic to sectors.
Hmm.
And more importantly, they are agnostic to fund management or fund managers or fund house beliefs also.
Hmm.
So many a times you want to be something which is more evidence based, rather less view based,
Hmm.
and sticking to something which is winning.
Hmm.
Winning both in terms of
Hmm.
outperformance of stocks
Hmm.
and where there is a positive tailwinds of fundamentals in the form of earnings, which are also available.
Hmm.
So this is a strategy which is agnostic to the labels which comes typically with equity funds in the form of the various size categories or various thematics or various sector funds.
Hmm.
If you are looking for a pure evidence based solution, then I think momentum is a proven strategy which can go beyond the biases which comes
Mm.
to fund managers and fund houses time to time. So this is in a way all encompassing all sectors or agnostic, but in the end, riding on the winners.
Okay. So, Ashutosh, momentum has been the flavor of season, as you rightly pointed out. It has outperformed all other categories over the past few years. So, why do you think that momentum still offers a lot of opportunities to investors?
Nishant bhai, here I want to just elaborate a bit on active momentum and put across our thought process of why we are bringing this fund.
Hmm.
As I said, it's an active momentum fund. It's a two-factor model.
Hmm.
Price momentum, we are looking at last 6 months and 12 months outperformance.
Hmm.
Say you have 200 BSE 200 stocks. What
Hmm.
we are looking for, which are the stocks in these 200 stocks,
Hmm.
which are the outperformers in 6 and 12 months. On a
Hmm.
blended basis, we would identify first 30, 40 stocks. This is your price momentum. But many times in price momentum, you suffer two, three
Hmm.
shortcomings. So I'll just talk about those shortcomings and how Nippon Active Momentum Fund
Hmm.
is working towards it. The biggest shortcoming of momentum is that
Hmm.
it may involve stocks which are bad quality management.
Hmm.
They just because of their recent outperformance, even bad quality stocks can come up in your overall strategy portfolio.
Hmm.
Second big problem is that in a very short period of time,
Hmm.
momentum can give you a lot of underperformance. It can give you a lot of pain.
Hmm.
Something that investors who
Hmm.
are into momentum investing has actually experienced in the last 6 months because this has been the big underperformer as a style.
Hmm.
What Nippon is doing, we are going one step beyond the wisdom of the buy side crowd.
Hmm.
As I said, beyond the price momentum, we are combining it with earnings momentum. So what we are looking for here is that what the sell side is thinking in the last 3 months
Hmm.
about the target prices of various companies in the market, about the earnings of various companies in the market, and whichever the companies they think are looking better in terms of potential returns and potential profits, we are considering them better earning momentum stories.
Hmm.
So what we are doing, we are combining these two, and in that process, we are avoiding the bad quality momentum. So
Hmm.
it is adjusted for volatility in the price momentum side, and it is backed by the earnings. So we
Hmm.
are looking for good quality, fundamental supported earnings.
Hmm.
So that is the first part. The other pitfall, Nishant bhai, which we discuss, is that it can give you a lot of underperformance in a
Hmm.
very short span of time. So
Hmm.
what are we doing about it?
Hmm.
What we are doing here is that we can identify the periods where markets are
Hmm.
exuberant or markets are too pessimistic.
Hmm.
When markets are too exuberant, that means there's a lot of disregard for risk.
Hmm.
That point of time, this two-factor model becomes a three-factor model.
Hmm.
The third factor which comes when markets are very strong. So, a couple of examples. If the breadth of the market, number of stocks above say 200 DMA are 90, 95, that means people are taking excessive risk and the
Hmm.
potential returns could be lower.
Hmm.
Similarly, there's this ratio called Sensex to total market cap ratio.
Hmm.
If this ratio is 40% or below, that means rest of the market has become 60% or more.
Hmm.
That is the time you know that there could be some accident which can happen and
Hmm.
some mean reversion will kick in.
Hmm.
That point of time, Nippon India Active Momentum as a strategy would introduce the factor called low volatility.
Hmm.
So apart from looking at price momentum and earning momentum, the third factor which will come in is low volatility.
Hmm.
And you would have already guessed that when
Hmm.
markets are in a very despondent mode,
Hmm.
something what we are seeing right now,
Hmm.
that point of time, people would be scared to
Hmm.
add risk to the portfolio. But we would, in this approach, we would add risk in the portfolio by adding the third factor beyond price momentum, beyond earnings momentum in the form of beta as a factor. So this two-factor model becomes three-factor model. It becomes more diversified. So in some ways, we can minimize the pain which comes with momentum investing. Otherwise, momentum investing over the long run is great, but many investors don't practice it because of these shortcomings. So we are
Hmm.
trying to improve upon it.
Hmm.
And yes, I think because momentum is all about wisdom of the
mm,
crowd. In my opinion, it will continue to do well. It's
mm,
not that that has done well in last 10, 20, 30 years. But
mm,
in my view, in a world which is full of uncertainties, it's better to stick
mm,
to the winners rather than, guessing who the winners would be in the future, because this is very uncertain world.
mm. Great, great, great. So, Ashutosh, passively managed smart beta fund focusing on momentum offer cost-effective way to invest in momentum fund. Then why do you think that investors should look at actively managed smart beta funds?
Good question. So, couple of things. First, we are not doing a single factor fund. We
Mm,
are actually combining it with earnings, and then we are also trying to time it with,
mm,
adding or removing risk to the overall portfolio based on our conditional contraindicators. That is one part. Second part is the passive approaches which are there. There we find that factor like momentum, which needs higher rebalancing, frequent rebalancing, that is missing in those passive index offerings. So
mm.
they rebalance a single factor like momentum once in 6 months.
Right.
In our case, we would be rebalancing every 45 days,
Mm,
one before the start of the earning season
mm,
and one after the end of the earning season.
mm,
So this as a factor involves higher churn and frequent rebalancing. That comes with the,
mm,
uh, in momentum investing, you cannot be lazy in terms of rebalance, right?
mm.
So all these things make it different from the passive offerings which are there in the market. And in our view, there is an ability to cope up with the changing trends in terms of sectors and stocks much faster, and therefore giving better experience to investors, which they otherwise would have in pure momentum investing.
Okay. Ashutosh, one last question. Why should MFDs recommend Nippon India active momentum funds to their clients?
Very simple. Here we are introducing to our clients or to our MFDs a fund which inherently is based on something with as a factor which has been a winning factor. All we are doing is trying to improve upon that so that the concerns relating to a winning strategy, that concerns we are addressing by diversifying, by combining it with other factors. So if you are looking for something which is devoid of fund managers, fund houses, views, devoid of any personalities, opinions, but more focused on facts, data, and processes, and yet you want to make good return over the longer period, then I think this is a very good offering for all kinds of equity investors who invest in all kinds of equity funds. The only thing is, any investors who are coming to this particular offering should have the same mindset like they have for other equity funds. That is, you should come in this offering from a longer term mindset. Just because we are rebalancing frequently does not mean that
Mm,
investors have to get in, get out in these kind of offerings. So you need to remain invested here, and momentum would work its magic,
mm.
and wisdom of the crowd would prevail over wisdom of individuals and wisdom of set of investors. So this is where my suggestion would be, my request would be to look at this particular offering for its holistic approach.
Okay, all right. So we have come to an end to this interesting session. Thank you so much, Ashutosh, for your valuable time and inputs.
Thanks, Nishan.
And finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Bye.